Ladies and gentlemen, good day and welcome to Emami Limited Q1FY25 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Percy from IIFL Securities Limited. Thank you, and over to you, sir.
Hi. Good evening, everyone. Welcome to this Emami conference call for Q1 FY25. I have on the call with me Mr. Mohan Goenka, Whole-time Director and Vice Chairman, Mr. Vivek Dhir, CEO, International Business, Mr. Gulraj Bhatia, President, Healthcare Division, Mr. Manish Gupta, President, Sales, and Mr. Rajesh Sharma, President, Finance and IR. I'll hand over the call to Mr. Mohan Goenka for his initial comments, and then we'll open up for Q&A. Over to you, sir.
Thank you, Percy. Very good afternoon, ladies and gentlemen. Thank you all for joining us today. It's a pleasure to have you with us as we reflect on the performance of the past quarter. As we celebrate 50 years of Emami, commemorating 5 decades of delivering happiness to consumers across the globe, I am happy to announce that this milestone year has begun on a positive note, marked by sequential improvement in demand trends and fructification of our strategic initiatives. Our resilience and innovative spirit has been the cornerstone of our success, driving us to achieve commendable performance and setting the stage for a bright and prosperous future. Rural demand showed gradual improvement with slight green shoots emerging. As you are aware that the country experienced its hottest summer in 14 years, leading to robust demand for summer products. Discretionary consumption was, however, impacted due to increasing food prices and muted consumer confidence. In this context, the company achieved commendable profitability driven by volume growth. Our consolidated revenue at 906 crores grew by 10% over the previous year. The domestic business saw an 8.7% growth in volume terms and a 10% growth in value, led by our summer portfolio. Navratna and Dermicool grew by 27%, while our healthcare range grew by 11%. 7-in-1 grew by 9%, BoroPlus grew by 4%. Additionally, the Man Company and Brillare continue to perform well, growing by 23%. The pain management range faced headwinds, declining by 7% due to heat waves. But sales have begun to pick up since June. While the slowdown in discretionary consumptions continue to impact our male grooming and case king range, which declined by 5% and 15% respectively. We are implementing various strategic initiatives to revitalize these portfolios and restore their growth trajectory in the coming quarters. During the quarter, we launched the first quickly hit powder for women, Dermicool Her, and Dermicool Soap with superior cooling effects in the modern trade and e-commerce channel to leverage the brand equity of Dermicool. Additionally, we also introduced various digital-first products under Case King and Zandu Care portal. Organized channels continue to perform well. The modern trade growing by an impressive 25% and e-commerce surging by 29%, both contributing 11% to our domestic business. Our institutional business also grew strongly by 23%, and general trade also returned to positive territory. International business grew by 11% in constant currency terms and by 10% in INR terms, led by MENA and SAARC regions. Despite facing currency depreciation in Bangladesh and macro issues impacting the CIS performance, We achieved double-digit growth led by key brands such as Navratna, RM21, 7-All-in-1, and KSK. From the financial performance perspective, our gross margin at 67.7% grew by 230 basis points. EBITDA at 216 crores grew by 14%, despite a 21% increase in A&P spends, with EBITDA margins increasing by 90 basis points. While profit before tax at 128 crores surged by 19%, with margins expanding by 160 basis points, and profit after tax at 153 crores also grew by 11%. We remain committed to our aspiration of delivering sustainable and profitable volume-led growth. We continue to focus on our strategy to improve our distribution reach, invest aggressively in our key brands, and drive market share growth across our portfolio. With the forecast of a normal monsoon and the government's continued focus on macroeconomic growth, we expect the improvement to further accelerate in the coming months. Thank you for your continued support and confidence in our company. We look forward to a promising year ahead. Thank you. Now we open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Avnish Rai from Nuvama. Please go ahead.
Yeah, congrats on good set of numbers. My first question is on healthcare and Zandu Care. Good 11% growth in healthcare overall, with La Nina effect this time, which means generally a harsh winter. Would you be extra aggressive in terms of the inventory build-up? And in terms of Zandu Care, if you could tell us what is the right to win here? You have done well. It seems good double-digit growth in Q1 in Zandu Care. Those 5 products which have been launched, for example, in the digital first, what is the competition here? How is your pricing versus the other large players? And what is the right to win here? Because digitally, many companies are launching, but ultimately, how would you get a good market share here? Will it be more of pricing-led only? If you could elaborate on the strategy.
So Gulraj is here. Gulraj will take the question.
Yes, thank you for the very pertinent questions you raised. I think, and thanks for your compliments on the growth. I think from a Zandu Care perspective, to answer the 2-3 questions you raised, as you are aware, the focus is on the online sales, whether it is through Zandu Care as a D2C platform or through the other e-com platforms such as Amazon, Flipkart, etc. And then the e-pharmacy change. And we are also launching many of these products in the modern trade space. So our pricing, obviously, compared to the regular products which are available in the GT space, is at a premium. But it's more or less in line with some of our major competitors. So it's not that we are overpriced compared to competition. Secondly, what is our right to win? One is the Zandu brand name itself. In the Ayurvedic space, Zandu would be among the top, leading players in terms of the consumer perception, consumer equity, brand equity. And thirdly, the kind of product development capabilities we have from an R&D perspective would be unmatched. And the fact that we had 2 WHO GMP manufacturing units. WHO GMP certification is very difficult to obtain. We are probably the only player who has got 2 manufacturing units in the country. So from a product quality perspective, from a product efficacy perspective, finally we are in the healthcare space, so we have to deliver on the efficacy. So from all that perspective, whether it is the pricing, the marketing strategy, the product quality, the product efficacy, I think we have a right to win on each and every product which we are launching, basically.
And which ones are more
Sorry, just to add, we are the first mover advantage. See, not many companies have their own platform. We had launched just post-COVID, and we are seeing good traction from Zandu Care. Now we have robust data, in the last 2.5 years since we have launched. So we are also, reached out to lakhs and lakhs of consumers. So, though it is in the initial phase, but in terms of advertising, in terms of, spends on healthcare is going to be significantly high compared to the CCD. So you will see a double-digit growth going forward in the healthcare.
understood? My second question is on the category which was the most challenging this time. So casing -15% YOY. If I see the largest market share in hair oils, they have also been struggling in value-added hair oil for many years now, and casing is also in the premium. So where is the customer going? Is he just downtrading? What will be your sense of growth for the other key player? Because they have also been advertising a lot. And when I compare this with the 9% growth in the 7 oils in one, I understand it will be on a smaller base. How do you explain in one 9% growth and in the more premium 15% decline?
So Avnish, Kesh King has a pattern. In some quarters it comes to growth, in some quarters it declines, depending on the consumer promotions and trade promotions that we offer. Overall, you will not see such kind of a decline going forward. This quarter, hopefully we will get to growth numbers. So, year-end, yes, I agree that it is in the range of about 3 to 4% decline. For that, of course, we are setting up a strategy, through BCG. But I'm not very concerned that, that 15% decline would continue. Surely, it should not be the decline. Yes, overall, the market for hair oils, particularly the premium hair fall segment, hair oil market is on a decline for quite some time now. So that we will have to see when the consumer bounces back. I'm not very sure, but as the rural market is picking up, we are seeing some green shoots. Hopefully, it should come to positive trend.
One last follow-up, and that will be my last question. So when you say that here promotions are very quarter-specific and that's how growth is, could you comment on the competitive intensity also, and why promotions are so volatile? Is it a more push strategy which is working currently? And for casing, will it be like the company average 50% from rural, 50% for urban, or more urban salient?
So Kesh King is more rural salient, Avnish, and this has been the trend in the past also. Nothing that we have changed. So depending on the consumer promotions, the market behaves like that. So in a year we do 2 promotions, and whenever we do promotions, the sales picks up.
And competition?
Competition intensity, honestly, has come down a bit in this segment. We have, particularly Indulekha and Patanjali is our main competitor. There we are seeing intensity coming down.
Okay. Okay, understood. That's all from my side. Thank you.
Thank you very much. The next question is from the line of Avis Bakshi from Sundaram Mutual. Please go ahead.
Yeah, hi team. Am I audible?
Yes.
Yes, you are.
So my only question is pertaining to the digital and new expand portfolio. While we have seen, a steady growth across this 30% this quarter, can you comment on what would be the size of these brands now? Also alongside this, any comments on the profitability of these brands? And lastly, any guidance on margin contribution from these brands to our overall EBITDA? These 3 broad points, if you can shed some light on, would be helpful. Thanks.
Sorry, Manish, can you throw some light?
No, overall, if you look at our portfolio, e-commerce and modern trade channels have done well over last few years. And we have also launched some D2C brands. We have also done some strategic investments in D2C portfolio via Helios and Billers, which have become our subsidiary last 1 year, 1.5 years period of time. So those margins are lower on these categories because of being a very smaller size compared to the larger core portfolio. But we see good growth potential and improving margins. So when we did investments in Helios, it was in investment phase, but post that it has started, it broke even and started making profits. And others like Belair is also into investment phase today because of being a smaller size, but going ahead, we expect margins to improve on these fronts.
And what would be the size of these brands now?
Like the brands which we have launched for our digital portfolio would be around 10 crores kind of size for us. And for the Man Company and Belair contributed to more than around 5 to 6% kind of revenues for us last year.
And in terms of profitability, sir, I mean, they've been inferior to our core portfolio, but still where are they in terms of EBITDA margin?
Very, very small margins. Most of them are into investment phase. As I said, Man Company, which is the bulk of the revenues for this, is break-even. It is earning some profits, but others are into investment phase.
Perfect, sir. Thank you.
Overall, everything put together, it is still negative.
Sure. Helpful. Thanks.
Thank you. The next question is from the line of Dinesh Shukla, Phillip Capital. Please go ahead.
Thank you for the opportunity. One question on demand side. So how was the July month with respect to demand environment side, specifically in the rural market? If you can quantify how was the overall situation during the quarter, or specifically for July month?
I was quite good, Dinesh. So we will have to wait for another. The monsoon is good in most parts of the country, so we are seeing a good demand cycle.
Okay. And the second question is on tasting side. Although we are taking the initiative to drive the growth, such as we have launched our new products, focusing on non-hair oil portfolio and providing continuous media support, and that is reflected in your A&P cost. But what kind of sustainable growth run rate should we expect for next 2 to 3 years in tasting, given the category headwinds?
As we are reworking on the strategy for tasting, and we have roped in BCG to develop a long-term strategy, we expect to get to the growth, at least 5% plus growth on tasting.
Okay. And the PPT you mentioned that you are focusing on Maharashtra, Bihar, West Bengal. So why are we focusing on only these 3 states? Why not in other states?
No, these are the primary states. These are the big contributors for tasting, So we are increasing our focus in these markets.
Okay. So then this data point I'm looking for, how is the mix between when I'm comparing with hair oil versus non-hair oil portfolio in tasting?
So today shampoo would be roughly 1/3 of the overall portfolio.
Okay. And last question is on the guidance side, because in your previous commentary, you did mention that you are aspiring to grow in double-digit revenue growth in 25, led by 2 to 3% price hike and balance with from the volume growth. So are we still maintaining the same guidance, or should we expect some better than what we have highlighted in the past commentary, given the improving macro trend and seeing the healthy recovery in local market?
Sorry, we don't give guidance overall. We have to see how the monsoon or the winter performs. But yes, the momentum is good. The external factors like monsoon, the rural markets are shining. So we will have to wait and see how the markets, how the numbers come out. But we are optimistic that yes, we will deliver better than our last year numbers.
Okay. If you allow, there is one last question on gross margin side. So on the will gross margin expansion will be led by the benign raw material prices, or we are witnessing any uptaking of commodity prices? And just follow up on the gross margin side, should we also expect some GM improvement due to the change in product mix, or just data point in terms of product mix, like how is what percentage of revenue is coming from the premium portfolio? That's all from my side, sir. Thank you so much.
So we have seen expansion of gross margins this quarter, and for the full year as a whole also we see some benefits on the gross margin front. And it is coming from benign raw material prices and also judicious price hikes, whatever we have taken last year and this year. And some amount of cost rationalization measures also, which is there, ongoing effort from our side.
So what is the revenue coming from the premium portfolio?
Sorry, which portfolio?
Premium portfolio, sir.
Premium portfolio as such, we don't define our portfolio within premium and non-premium segment as such. So if you look at our core portfolio, Imami is mostly everything is core and for mass market. You can say that the strategic investments which we have done in Man Company and Brillare are premium ones, so which is roughly 5.5%, 6%, as I said earlier.
Okay. Any aspiration to increase or improve of the savings from 5 to what percentage in the next 2 to 3 years?
So our endeavor would be to focus on our core portfolio as well as the new ventures which we have got into and growth in larger ones. So it would all depend on the kind of growth trajectory we see for our core as well as the new areas. So whichever, if everything goes in line, we would be at a kind of a similar revenues would be coming from in a similar fashion. But obviously the strategic investments are pretty small today, so going ahead they have potential to deliver almost double-digit kind of a numbers to our top line. So their proportion should increase.
Okay. So one clarification on volume growth, 8.7% volume growth is X of inorganic business or it is including of TNT and Brillare?
So there is no inorganic portion in our numbers now. So these strategic investments have become subsidiary for more than a year now. So everything is in base today.
If I exclude the TNT and Brillare volume growth, what would be the adjusted volume growth for the quarter?
So without the strategic investments also our volume growth is over 7% kind of.
Okay. Thank you so much, sir.
For the core business, yeah.
Thank you.
Thank you very much. The next question is from the line of Harit Kapoor, Investec. Please go ahead.
Hi, good evening. This is Harit here. So just a few questions. One is, you mentioned on the pricing side. So, this quarter pricing seems that we had lower. Just wanted to know, do we expect incremental pricing actions in the balance part of the year or, given the commodity environment, there's no real need from that perspective?
So Harit, this year we will not be very aggressive with our price increases.
Okay. Got it. And on you mentioned in your release as well as in your opening comment the expectation for growth to accelerate. This quarter has anyways been quite a good quarter. 9% volume growth is close to 9% volume growth is a very healthy number. But there definitely has been the help of season. I was just wondering, if with season being, say, neutral on a year-over-year basis for the next, say, 2, 3, 4 quarters, do you still expect that, the overall demand environment as well as your actions could lead to similar to accelerating growth? Is that the way to think about it?
Sorry, that is of course our endeavor, and yes, this season we benefited from summer, no doubt. We could have done much better if we would have had enough supplies. So a lot will depend on multiple factors, but let us enjoy what we are having right now. Things are improving at the ground level. Rural markets are also shining. So hopefully we expect anywhere between 5-6% volume, 1-2%, value growth. So as I said, a lot depends on many external factors. It's very, very difficult to really say, uh, what numbers we will achieve.
Sure. Fair point.
But a lot is happening on distribution, casking strategy, fair and handsome strategy. The brands which are not performing so well, the company is having increased focus on core portfolio.
Great to hear.
Advertising budgets have increased significantly over the last 2 quarters. This quarter also increased by 21%. And going forward also, we are going to be extremely aggressive, in terms of spends, launches. There's a lot happening, Harit, honestly.
Great to hear. And just you were saying, let's enjoy the good things. I just was wondering, July has been a fairly, from a season perspective, it seems like it would have aided pain management. You had a rough June, and I think July from a monsoon perspective has been strong. So, is that the right way to read it, that you should see a fairly quick turnaround in this one if the coming months are also okay?
Yeah, paint portfolio is doing well in July because it's the peak season for paint portfolio. So, but we have another 2 months to go for the quarter. Let's see how it pans out to be.
Great. So one last question was, you did mention on ground green shoots and things improving. I was wondering, are you seeing this at an all India level, this improvement on ground, or there are certain markets, certain regions in rural that are doing better than others? Just your experience of how it's been, given your saying it is strong in rural.
Yeah. Manish, can you throw some light?
So overall, the uptick is everywhere, but I would especially call out for our business at least, North is a little ahead. East we are doing well. West we are experiencing a lot of expansion of modern trade, and hence, channel shifts happening with general trade. And South has been pretty steady like always. So if I were to call somebody out, I think at least our gains have been more in North.
Got it. Okay, I'll come back for more. Wish you all the best. Thank you.
Thank you. The next question is from the line of Gaurav Jogani from Axis Capital. Please go ahead.
Thank you for the opportunity, sir. So the first question is with regards to the tax rate. If you look at the tax rate this time around, it's 15%. I think last quarter was also around 14% or, and I think we have a guidance of around 10% tax rate for the next 2 years. So how is there any modification in the tax rate going there?
No, I think we have seen some higher tax rate in quarter one, but we feel it should moderate down for the remaining part of the year. So for the full year, 10-11% should be maintainable.
And that would be the similar number for the next year as well, sir?
Yeah.
Okay. And so the next question is with regards to the man company and the Brillare. While the size are lower, but we have also seen the growth rate now coming to around 20-25% off. So is this a seasonal phenomena wherein generally these brands continue to grow later in these quarters and probably we could see higher growth going ahead? Or any light that you can throw on the growth rate from these 2 brands particularly?
It was not very audible, Gaurav. What was the man company and Brillare?
So the growth rate now, given that the base is small, that we are growing 20-25% odd. So my question was whether we will be able to maintain this growth rate, or there is some element of seasonality even in these brands as well.
So there is no seasonality in the man company or Brillare. Brillare is going faster than the man company because it is smaller. But put together now they are almost in the tune of 225 crores. This year we expect to reach to about 275 crores. So which will be almost 8% of our revenues. Yeah, but we hope to grow at about 20-25% in these two products.
So, and sir, just a clarification on this rate. When you say that it's now around 5 to 6% of the sales, I'm assuming that this is consolidated sales.
Yeah. Total sales.
Okay. Sure, sir. That's all from me. Thank you.
Thank you. Participants who wish to ask questions may please press star and one now. The next question is from the line of Kunal Vora from BNP Paribas. Please go ahead.
What percentage of revenue came from summer link portfolio in this quarter, and what was the growth in the summer portfolio overall? And what was the growth for the rest of the portfolio?
Yeah. So summer portfolio this quarter grew by almost 27%, which was primarily Navratna and Dharmipur. So revenue of these portfolio have been roughly 50%. Half of the revenue came from summer portfolio.
So the rest of the portfolio would have, let's say, not grown at all, or what will be the performance?
No, if we, I think Mohanji mentioned in his opening remarks, and also we have shared the presentation where you will see healthcare range have grown by 11% in double digits, BoroPlus range have grown, but pain management suffered because of the heat waves during the first quarter, and obviously Case King and Fair and Handsome male grooming had their own issues this quarter as well. Going ahead, we are taking actions to recover the lost ground. And other businesses like the demand company, Birla, have grown strongly. International business have done well. So we have seen categories of businesses which have done well in this quarter, apart from summer, as well as some of the areas where we have been impacted.
But if I do the broad math, 50%.
So this 50% I talked was for the domestic business.
Okay.
For comparison.
It implies that the rest of the business almost did not grow because half the portfolio is 25% growth.
No, because Case King declined in double digits, Fair and male grooming declined, and also pain management declined. So overall, you were right that it was almost flattish growth for the rest of the portfolio, domestic core portfolio.
That case, in the coming quarters, as you don't have the benefit of season, what gives you confidence that you can drive double-digit growth rate in, or even 5-6% volume growth, 1-2% value growth, which still implies high single digits. So as you don't have that benefit going forward, how do you expect the close to double-digit growth to come?
So just wait and watch, Kunal. We are doing a lot of strategic initiatives. And as I said, there are issues in the rural markets, and July also has done well. So just wait and watch. We are doing a lot of activities.
Yeah.
Understood.
Just to add on that,
investing on A&P.
Yeah. Only to add on that, the pain portfolio which has suffered because of the heat waves in quarter one, we expect good recovery in pain portfolio going ahead. Winter should be, we have a favorable base, which would help us. And as Mohanji said, a lot of initiatives are being taken on male grooming and Case King, through which we should be able to arrest the degrowth, and some growth should also happen on those fronts also.
Understood. Thank you. And second and last one is on Case King hair oil. What's the size now in terms of revenues, and how has it done since the acquisition? What kind of figure have you seen in terms of hair oil? I'm not talking about the shampoos and other extensions which you have done, but the Case King hair oil, how is it done?
So overall Case King portfolio is over 300 crores kind of a size, and when we acquired it was 230 odd crores kind of a size.
Okay. But you did mention that 1/3 is coming from shampoo. So hair oil, since the acquisition, has not grown at all?
So shampoo was there earlier also, but with a lower share. So during that time also some bit of shampoo was there. So hair oil, obviously yes, for last couple of quarters we are facing challenges. So it has grown for last couple of quarters. So it has taken off. But shampoo we are pretty much excited and which we are focusing as a new brand itself only, and that is showing encouraging response. So overall portfolio still looks interesting to us. As Mohanji said, with we are taking strategic initiatives and look forward to at least mid-single digit kind of a growth going ahead.
Understood. That's all from my side. Thank you very much.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. The next question is from the line of Harit Kapoor from Investec. Please go ahead.
Yeah, thanks for taking the question. I just had one follow-up. Rajesh, could you just help me understand the amortization schedule for this year and going forward? Yeah, sure, Harit. So this year amortization would be roughly 92 odd crores kind of, and going ahead it would be 88 crores, 75 crores for next 2 years. Got it. That is my question. Thank you. Thank you.
Thank you so much. The next question is from the line of Soham Samanta from Century Broking. Please go ahead.
Yeah, thank you so much for giving me the opportunity. So, just wanted to check one thing. In NP, like this quarter, we have done almost 20.3%. So, what will be the expected range for this year? So, normally we have seen last 6-7 years, we have been maintaining 17 to 18%. But will we go more than that? Like 20% range will be there in this year?
On advertisement you're talking about?
Yeah, ANP.
Yeah. So if you look at our advertisement pattern, it is slightly higher in quarter one. So for the full year, we should be able to manage within that range, right? 50 basis points, 200 basis points can always increase depending on the need.
So in that case, we'll expect that our margin level will be around 26-27%. It will be in that case.
So if you look at our numbers for this quarter also, we have gained on the gross margin front, and we expect some gains for the full year as well. So we should be able to increase some bit of margins, EBITDA margins also for the full year despite higher advertisements.
Then second part in Navratna, like this quarter we have done 37% growth. So do you expect for full year, like the season is gone right now, but do you expect for a full year, can you expect a lower double-digit growth in this?
No, yeah, sure.
Okay. And sir, as you mentioned that this casting and male grooming both are working under BCG and all. Like for casting, as you have guided for 4 to 5%, like mid-single-digit growth. So do you expect a similar kind of growth you can get from male grooming range as well? For a full year?
Yeah, obviously.
Yeah, we should expect a higher growth coming from male grooming. Once if the strategy is in place, it will take one more quarter for the strategy to be pulled out. Then we will have to wait for the results.
Okay. And for the last question from my side, like the project coach, as we have already completed the project. And so what are the benefits now we're getting, if you can explain something?
I think you can take this question offline. This is a long drawn question. You can always talk to Rajesh and discuss it with Manish.
Oh, thank you so much. That's right.
Thank you. The next question is from the line of Nilay Shah from Moon Capital. Please go ahead.
Sir, I want to delve a little bit into this growth aspiration. And a lot of things were discussed on the call about how rural is doing very well for you. Jandu and the pain management part doing very well in July, impacted by seasonality last quarter. And then you spoke about how Man Company and Relair is also doing. The growth in the digital portfolio is also very strong. We've had weak winter sales last 2 years. Monsoon has been good, With all these factors in place, you still sound a little bit conservative, if I can say so, on the revenue aspirations for the financial year. What is it that you are looking for to fall in place to get more constructive?
Nilesh, this is only through our experience in the past. We can always sound very robust, but there are a lot of external factors, which come into play. There are government initiatives. Monsoon has been good this month, but we don't know how the monsoons in some parts of the country, the monsoons are extremely weak. In the eastern parts of the country, the monsoons are very, very weak. So we are a pan-India player, At times we have seen markets suddenly going up and down. It's not just that we sound optimistic and at the end of the year we say no, we could not deliver. That's not the way we look at things. So yes, there are some clear areas which is, digital front on e-commerce, modern trade. Like this month, Bangladesh has been a disaster in the international business. So, there are some unforeseen circumstances which just keep on coming in. So how do you really guide on numbers?
Okay.
So let us just wait as the things go by. If things improve, you will all come to know.
Got it, sir. This makes sense. Thank you very much.
Yeah.
Thank you very much. The next question is from the coordinator, Mr. Percy. Please go ahead.
Hi, sir. Can you just give us your thoughts on how you think about inorganic growth in terms of what are the areas that you would want to look at? What kind of synergies would you sort of expect what you bring to the table? What is the rough size over 3-4 years that you would be looking at, and so on? A general thoughts on inorganic growth, please.
Actually, we don't discuss on inorganic growth on a Concall.
No, sir, not asking about any specific targets. The overall thought process, how open you are to it, and if at all, in which areas you would be looking at, and so on.
Of course, we are open for inorganic growth. You have seen we have done Dermicool, we have done so many strategic investments in one company, Relair. There are few more that we are looking for. So there is no doubt we keep on looking for inorganic opportunities. We have a strong balance sheet, to look for inorganic opportunities.
Understood.
And this is part of our long-term strategy. Inorganic is part of our long-term strategy.
Correct. And this would be largely in India, or would you look at international also as far as inorganic is concerned?
The first choice is India, no doubt. But if we get some inorganic opportunities outside of India with very specific markets, then we will look outside India.
And how would you look at, which areas to sort of prefer? Is it that you would look at inorganic in order to give you an entry into certain categories which you are not there, or would you prefer to consolidate market share within current categories?
The inorganic is a broad strategy, Percy. Again, as I said, I can't discuss inorganic strategy on a phone call. But we don't discuss inorganic strategy.
Sure. Understood. I just wanted to understand on the weak parts of the business, which is the male grooming and the Kesh King. You mentioned that you would sort of look at strengthening those aspects. Again, I know you cannot talk before some things actually happen, but is it more in the line of diversification of the product portfolio, or is it more in terms of rejigging and getting the core products growth up first?
It will be a mix, Percy. There would be a lot of new line extensions in both the portfolios, both in Kesh King and Fair and Handsome. The strategy, we are working on it. We are very unhappy with the numbers of Kesh King and Fair and Handsome. The brand teams are robustly working on the long-term strategy for both the brands. As I said, this quarter was one-off for Kesh King. We would see growth bouncing back in this quarter. Same for Fair and Handsome. You would not see these kind of declines in both the categories.
Understood. That's all from me. You can go ahead with the question queue, Deepika.
Thank you so much. The next question is from the line of Binay Shukla from Phillip Capital. Please go ahead.
Yeah, thanks for the follow-up question. One question on the oral care segment. We have launched Chandu in natural segment a couple of quarters back. So have you rolled out these products to GT channel, or is it still on organized trade channel? And if you comment on how the traction so far on the Chandu side?
Gulraj here, I'll answer that. So, yes, as you said, we launched it 2-3 months back. The physical rollout happened about 2 months back, and we have been giving marketing inputs and other trade marketing support. So we started to see, the response, but we are still in a stage of, testing the waters here between e-com and between modern trade. As you know, this category has a certain usage timeline in home. So what is important is to see what the repeats are and how many people or what percentage of people repurchase and what is the ramp up we get. So it will probably take us a few more months to know and understand what the real response is. So at the moment we plan to support the launch by way of inputs in the e-com and modern trade channels. We'll probably take some more time to decide on the further extension into the retail market. But the overall feedback seems to be good, whatever, initial inputs we got from consumers and the trade. So we are still in the process. We had launched it in a couple of states. We are in the process of rolling it out into other states in modern trade.
Understood, sir. So how the toothpaste category growth during the quarter? If you can give any broad cut range for the discount?
We don't have specific, we don't subscribe to Nielsen, etc., but my sensing is it would be in the region of around 10% for the category growth.
Overall, not the natural category.
Yeah, that's right, overall.
And last question is on the Dermicool. Are we planning to leverage our Dermicool brand via entered into the adjacent category like we are doing for tasting?
We launched the Dermicool soap this quarter.
Okay, understood, sir. Thank you so much.
Thank you.
Thank you very much. To ask a question, please press star and 1 now. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you everyone for joining us for today's call on quarter one results for Emami. Thank you IFL for arranging this call. Have a good day. Thank you.
Thank you.
Thank you.
On behalf of IIFL Securities Limited, this concludes this conference. Thank you for joining us, and you may now disconnect your lines.